Now, when it comes to dividend investing, the JP Morgan Equity Premium Income ETF is one of the most popular ETFs for more dividend income focused investors like myself. Now, this is because this ETF doesn't only yield about 7% as of right now, but also has paid dividends on a monthly basis for several years now. On top of that, because of the cover call overlay, this ETF is very defensive when the market turns red. And for me personally, I am a huge fan of JEPI. I own over 1,200 shares and have been buying shares of JEPI for several years now. But in this video, we are going to dig deep into a newer dividend income focused ETF that offers not only very similar attributes that JEPI offers, but even offers some things that in my opinion are better, which is why as of recently, I have no longer been buying shares of JEPI and have been buying this other dividend focused, income focused ETF instead. So if you're an income focused investor and want to learn more about this ETF that not only pays a ton of dividend, but offers even more than that than JEPI, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So I'm sure by now some of you guys might have guessed it, but the ETF that we're talking about here is SPYI, or the NEOS S&P 500 High Income ETF. Now this ETF is very similar to JEPI along with other cover call style ETFs. But like I said earlier, this ETF offers some things that JEPI does not offer. But before moving any further ahead, I think it's safe to say that we should dig deep into this ETF, figure out exactly how it works, and I'm going to explain to you exactly why I'm such a massive fan of this ETF, and why I think if you are a more dividend income focused investor, you're going to be also. So first, all right here on the NEOS website, it says looking for high monthly income. And I would say yes, who isn't? The NEOS S&P 500 High Income ETF, or ticker symbol SPYI, aims to offer high monthly income in a tax efficient manner with the potential for upside capture in rising markets. Now, some of the objectives are to seek high monthly income in a tax efficient manner, and also on top of that have upside potential when the market turns bullish. Now this is also kind of cool. It shows that since inception, the NEOS S&P 500 Income ETF, or SPYI, has outperformed some of the largest income-focused ETF peers, and some of these are very popular. And just for full transparency, I personally hold everything in here. So you can see that the blue is total returns. This is dividends plus price return included. SPYI almost has a 20% total return, where XYLD has over 12%, JEPI has 16%, Devo has almost 16%, and SPY, of course, the king of all ETFs, has almost 30%. Now, one of the other reasons I wasn't exactly sure about how much SPYI I wanted to add to my portfolio long term is because a lot of these higher yielding ETFs, although many times offer nice juicy dividends, they seem to decay in price over time, meaning that, for example, if you buy a share for $50, even if it pays a 10, 11, 12% dividend yield, if a year later the ETF is trading at $40 per share, you didn't really gain anything. If anything, you lost money. But so far, since around 2022 at least, so keep in mind this ETF still is relatively new, the ETF is up 3.33%, which I hear you, it's not all that much, but it is in the green, and we haven't seen any major decay, at least as of so far. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number three, this is also one of my favorite parts about this ETF, and this is another reason why I really decided I'm going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now at this point, we're sort of getting into the weeds, and I really don't like talking about taxes all that much on my channel because I think that taxes are such an individual situation that can be so different, determining many different factors, but also looking at things like this right here. Just for an example, it is in connection with the monthly dividend payment of 47.5 cents per share that was paid back in January 2023, just for an example. It shows that 94% of such dividend will be return of capital. Now, return of capital is going to be taxed differently than ordinary or non-ordinary dividends, etc., etc. And like I said, I'm not going to go super deep into that, but just know that SPYI could be a perfect ETF with a great tax strategy for your portfolio, depending on what your needs and wants are. So we talked a little bit about SPYI, what this ETF is and how it works. We even talked about the total return so far next to some of the other popular cover call style ETFs and some of the main reasons on why I'm personally so attracted to this ETF as of right now. But now looking into the fun part, looking at the dividend for SPYI. We're talking an 11.67% trailing 12-month dividend yield, which is much higher than most other covered call ETFs across the market currently, and of course much higher than basically all blue chip dividend stocks. Now, what's also impressive and something that I was very eager to see how this was going to play out long term is if or if not SPYI was going to offer a consistent monthly dividend, because some of these covered call funds, things like JEPI or even JEPQ, due to volatility in the market and due to the different pricing when it comes to premiums in the option market, some of the covered call ETFs pay a very drastically different dividend, which all in all is fine in most ways, but it is very nice to be able to sort of have an idea of what you're going to get paid next month and the month after that and the month moving forward. Now, of course, take this with a grain of salt. SPYI has not been around for that many years or even that many months and has not paid that many dividends compared to some of these other covered call funds, etc. But since the inception, SPYI has paid a very steady 46, 47, 48, or 50-cent dividend every single month since the ETF started. Now, just because SPYI paid this in the past does not necessarily mean that it's going to continue to do so forever, of course. But it looks to me like there's a certain cadence here, and it looks like the fund managers are doing what they can to make sure investors are getting right under 50 cents, more or less, per month every single month, which I absolutely love as an investor. So now that we dug deep into SPYI, and I think by now you guys know exactly why I'm such a big fan of this ETF, I wanted to lastly compare SPYI's performance next to JEPI, just because they definitely are somewhat comparable, and see which ETF has performed better ever since SPYI's inception. So if we go all the way back until August 2022, which was right around the time that SPYI started, and compare a $10,000 investment with dividends reinvested next to the JEPI ETF, you can see that the total return on SPYI's end is around 19.44% within this time frame, where JEPI's total return is right around 17.6%, or SPYI's return around 11.6% annually versus the 10.53% annual return that JEPI's offered. Now, I know you're probably saying this doesn't really give us all that much information because SPYI is a relatively newer ETF. It hasn't been around enough to really have any significant data to go off of. But even still, it is interesting that within this time frame, even though JEPI and SPYI have similar strategies, SPYI has pulled ahead, which in my opinion is because of some of the specific strategies that SPYI offers over JEPI. Now, in my opinion at least, I'm still a big fan of JEPI, and I'm not looking to sell any of my shares of JEPI anytime soon, but moving forward, I'm looking to build out a sizable SPYI position because, like we talked about, I think that for a covered call income style ETF, this ETF offers everything and more that I'm looking for. But lastly, now I want to hear from you guys down below. If you were, for whatever reason, only able to either buy SPYI or JEPI, which one out of these two would you pick? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.